What's up, guys? 7 Star Mike here, and today we got to talk about going long in a market that shows nothing but a downtrend. If you guys saw one of my posts yesterday, someone reached out to me about trying to time the bottom and where they can get into calls. Well, they reached out to me again today saying they took some calls and they're getting killed. So they want to know what's going wrong. So let's talk about what it means to catch a falling knife, why we don't do it, and when it might be okay to go long in a downtrending market. So if you guys have heard the term trying to catch a falling knife, let's take a look at what that means. What it's referring to is trying to go long on a very bearish chart. Now, on the screen here, we've got a knife. Imagine this is falling through the air and you're trying to catch it. Here's what trying to catch a falling knife really is. We've got this image here. That's what's falling through the air. But to catch it safely, you only have this little portion to grab. So out of your entire knife length here, you only have this small portion to grab in order to be safe. Otherwise, you're getting cut. So catching a falling knife is very difficult because you have to be very precise. Trying to go long on a very bearish chart is difficult because you have to be very precise. Okay, so let's talk about what a confirmed downtrend is. This is what it's going to look like on the chart. Now, it's not going to look exactly like this, but this is an ideal situation. So what we have here is a point where we start working our way down. Then we have a retrace up to this level here. We continue our way down, retrace, continue our way down, retrace. Now, a confirmed downtrend is a series of lower lows. So each time we make a low point, it's lower than the one before. A low point is lower than the one before. A low point, lower than the one before. Now, it's also defined by a series of lower highs. So this high point here is lower than this one here. The next time we make a high, it's lower than the previous one. The next time we make a high, it's lower than the previous one. The next time we make a high, it's lower than the previous one. So a confirmed downtrend is lower lows. There's a lower low, lower high on the retrace, lower low on the next leg down, lower high on the retrace, lower low on the next leg down. So here's why trying to go long in this situation is very hard and very risky to do. Let's draw our confirmed downtrend again. What you're trying to do is take this little portion of a move after this big move, and you're trying to capitalize and make money. So you have a really big move, good chance to make money, a really small move to try and make money if you're going long. A really big move to make money to the downside, a really small move to make money on the upside. Now, as long as we're in this confirmed downtrend, every time we pop, that's your chance to either add to your position or take a new short position if you're not already in one. So if you're trying to go long on any of these retraces here, again, let's look at the pattern. You have this big move or this small move. This big move or this small move. This big move or this small move. So if you're trying to make money on these little retraces, you have to be very precise on where you get in and very precise on where you get out because you have such a small window to make that move. If you instead wait for these bigger downtrends, you have a little bit of room for error. So even if you don't get in right there, let's say you get in when it breaks that level there, you still have this big move to capture. Whereas if you miss this entry here to go long, and let's say you get in here, you have to get out right away before you're making that next leg down. So on these confirmed downtrends, it just doesn't make any sense to take a long position. Now you're going to say, well, Mike, when is it safe to actually get into a long position? What you want to look for there is a trend reversal. And what that's going to look like is something like this. We have our downtrend. What you want to see is maybe on this uptrend we come down again, but we don't make a lower low, and maybe we just go sideways for a little bit. Or maybe we make a little bit of a lower low, but then come right back up. And then what you want to see is the shift. So we have a higher high. We've been making these high points here. They're all about the same consolidation area. Right up here would be a first higher high. Then ideally, you want to see it come back down to test this level. Prior level of resistance right here becomes support, and then a higher high. Higher being higher than that last one there. So this would be an ideal situation. You have your downtrend, you have your consolidation, and then you have a higher high and an uptrend. Now, again, it's not always going to look as clean as that, but that's the ideal situation. That's what you're looking for before you want to even attempt any kind of a long. And if you look at the broader picture, maybe this is today's confirmed downtrend, but let's say you look on the daily chart and the downtrend looks like this. You still want to be careful taking any of those longs, because in the longer time frame, you're in a very confirmed downtrend. So if this is a 1 minute chart, your uptrends, these moves here, they're going to be very tiny compared to the overall downtrend. So you want to be careful taking anything long until you see a situation like this. Now, I know why this trader is doing what they're doing. They're relatively new to trading. They're not super successful. So they're following someone else, trying to latch on to someone else's trade. The advice they're following, however, in my opinion, is just not the right way to look at a market. Now, everyone trades a little bit differently. My way isn't the only way to do things. I'm certainly not the most amazing trader on the market, but there are certain things that you just have to follow as a new trader, especially. And one of those is don't fight the trend. Right now, we're in a very solid downtrend. You just don't try to find long positions in a downtrending market. So if you're new, I get it. You have to find someone to teach you and someone to latch onto to learn the basics. But you do have to be careful about who you follow. Some people out there are doing some risky stuff. Some people are looking at the market in a biased manner. Follow the charts. Don't even listen to what I say, just follow the charts. And right now the charts are going straight down, so the little pops up are not the times to go long.